Hello and welcome to BQ Prime. You're watching Earnings with BQ. I'm Monal Sangvi and our guest today is the CEO of Dr. Lal PathLabs, Mr. Bharath Uppiliappan. Welcome to the show, sir.
Thank you very much, Monal, and I'm glad I'm here. And thank you very much for hosting me here today.
The pleasure is ours, sir. Dr. Lal has had a wonderful quarter with revenues up 8%, profits up 43% year on year. Margins have come in strong at 27%, EBITDA is up 24%. It's been a good quarter, above street estimates. So what has led to this phenomenal quarter? Also, the margins have come in really strong. So what has aided this growth in margins?
So let me take you a bit of drill down around our results, Monal, and for your viewers. We grew top line, as you mentioned, at 7.6%, but more heartening is that we grew our non-COVID volume, non-COVID revenues by close to 10%, which is similar to our past historical averages. So bringing back the non-COVID revenues to a pre-COVID level, I think has been a good kind of milestone for us to hit before we build it further up going forward from here. What has really aided the non-COVID revenue? There are 3 or 4 factors. One is that we have put intense efforts around creating the brand awareness of Dr. Lal PathLabs, and we launched a new ad campaign in the quarter themed as Bharat Ka Vishwas. Why do millions of consumers and patients across this country and also lakhs of doctors trust Dr. Lal PathLabs? And we are given quantifiable reasons for people to kind of appreciate what we really do in the background. This will also help us move the discussions from price and discounting to truly what will drive this category forward, which is all about medical excellence combined with service excellence. Having said this, we also saw a strong growth in our Swasthfit portfolio. The Swasthfit portfolio clocked revenues of 112 crores. On an annualized basis, it is going to touch about 500 crores, which is a good milestone to hit, given where we started off with. And second contributor was the super specialty portfolio, including genomics, our LCOD initiative, our autoimmunity initiative. And these significantly pull a lot of revenue in and growing at a good pace, given the innovations we've done around this whole portfolio. We've also kind of further segmented our routine tests into multiple components, which are more medically relevant for our patients. So across the portfolio, we have had innovation going and a freshness being launched so that we become more relevant and differentiate ourselves in a category which is otherwise getting commoditized. I think that is what really led to the strong revenue growth performance. Looking at margins, the best way to look at margins for this quarter is sequential. Sequentially, we grew about 180 bips, and this was led by a lot of effort on the material management side. So some digital initiatives have helped us reduce the consumption of consumables and other reagents. And this is really what is reflecting in the P&L, apart from having what I would call strong commercial acumen and managing the rest of the cost lines to ensure that they don't grow faster than the revenue line. I think, simply put, it is a bit of effort on managing the portfolio of test geographies and also on the cost line front.
I'm just going to question this further and ask you what do you think are the revenue and the margin targets for the year? So for the whole year FY24, can we expect it to remain at current levels of 27% or maybe even higher than that? What is your insight on that?
Right. So on the revenue side, we have said that we will like to come back to our pre-COVID revenue levels, which is double-digit revenue growth. We have already seen the Q1 coming, doing that, and we hope to sustain and build further upon it as we move forward. Second is on the margin profile. As well, we have said that we would like to go back to the pre-COVID margin levels. Our Q1 results very clearly show that we are kind of not only met but bet the number. But when we look at the future, what we are very conscious about is that we also reinvest back in the business on advertising, on doing a lot of research work, and on digital and IT work. So what we will do is to build the margin profile and reinvest back in the business. And for sure, we'll kind of meet the pre-COVID margin levels of 25-26%.
Thank you, sir. So, also break up on the Swasthfit. If I were to understand correctly, it's bundled services, and this is the space where a lot of competition had come in the last 1 year. What do you think of the competitive intensity? I mean, despite the competitive intensity, also you managed to have a very strong growth on that front and expect it to continue for the year. So, what sort of revenue mix are you anticipating for the year? How much of it, and eventually, how much do you think would come from the Swasthfit portfolio? Also, what sort of margins that we usually see on this portfolio?
Right. A very good question. The way I would look at SwasthFit is it is a portfolio of bundle tests which solves for a certain problem statement of the patient or the clinicians. Right. So currently it is a portfolio of what I would call routine tests bundled in various forms and shapes, which solves for medical conditions in one form or the other. Currently, the contributions moved to about close to 23 odd percent. And I would say it is about 112 crores for the quarter, which means about close to 500 crores exit rate is what we are looking at on an annualized basis. Having said this, what can this really move to is a question which is possibly left open to our own imagination of how much more we can bundle, because bundling actually solves for patient issues as well as the clinician issues. So we can create more bundle test portfolio on the routine side. We can also create a lot of bundle test portfolio on the super specialist side as well. So if you look at cancer detection, we can combine multiple tests to make the diagnosis faster, right? While we do a good job on the accuracy side, we can also do better on the faster side or the quicker diagnosis side. And bundling really helps in that whole space. So we can look at bundle test portfolio in our mix going up significantly over a period of time. Will it be SwasthFit? Yes, for sure. But will you add newer components to the SwasthFit or the bundle test portfolio? For sure, yes. So it is a constant work in progress. And what I would say is that we are very keen to solve for the market problems. And SwasthFit and the bundle test portfolio is one route to do that.
One break up on the non-COVID revenues as well. Now, going forward, you said it's going to be a double digit. So we already taken price hike in the last quarter, and we seeing a bit of the result here. Now, going onwards in the future, how will this composition change? Because right now there will be some element of price increase. What will it be going forward? What will
three components to revenue. One is price increase. And we have all said that the price increase is close to 3 odd percent in the overall, what I would call the growth profile. About 2.5% came from volume growth for this quarter, and the rest was mix of either product or geography and so on. Now, what we would really like for us to see and do in the future is about growing the volume mix further up. From 2.5 to further up, so that we are able to build and sustain this 10-11% double-digit growth rates, and not be only dependent on the price increase kind of impact. So that is the way we should look at it, to say that we will drive more volumes to get to the double-digit growth aspirations. As well, manage the mix better.
Suburban side, are we with the margins? There's some work still left where we are trying to catch up with the overall entity level margins and cost margins front.
I didn't get your question properly, Monal. If you could repeat yourself.
So on the suburban diagnostics, have we reached the same level as the whole of the entity, or there's some work still left to be done on the cost margins front? The cost was higher post acquisition.
So Suburban, as you would remember, was a very strategic acquisition to build a large business in the West as we move forward. Our current focus is on two things. One is driving revenue growth. And I'm happy to share with you today that in Suburban, we have launched a large thematic campaign which addresses the needs of the patients during the vector-borne disease season as it unfolds going forward. So it is very well positioned to capture the best of the opportunity provided by the market to us. On the cost front, we are obviously looking at synergies. to combine between Dr. Lal PathLabs and Suburban to drive the margin profile up. There is still some work in progress, but we are more concerned about driving the growth, and that is where we are really focused upon.
My last question would be on the balance that you have, the cash and investment balance is at 880 crores. So are we looking at further expansion? What geographies are we looking at, inorganic growth or organic growth? What's the view?
So from an overall strategic perspective, yes, we will use both organic and inorganic routes to grow. For the organic growth, the capital requirement is not as intensive as what is required for the inorganic side. So we'll continue to build the organic side till an inorganic opportunity presents itself. Currently, we are focused, like I said, on integrating and building further the Suburban business. And yes, whatever opportunity presents tomorrow, we'll be open to that.
Thank you so much, sir. It was a pleasure having you. See you in the next quarter. All the best.
Likewise.